My goodness, goodness, goodness. I think everybody is coming in. Yes, we are. If you can hear me, throw a yes in the chat so I can hear you guys and see where we're at. Ta-ta-ta. We've got welcomes coming in. Let's see if I'm coming across loud and clear. Or if we've got shy people in the house. Come on, guys. Oh, look at that. Crystal is the first person to the keyboard. Yeah, kudos to Crystal. It says hola on there. Oh, here we are now. Bradley from Central Florida. Peter Graham's here. Andrew's here. Sue from Germany. Ron's in the house. Mary B's in the house. Mary B back. And Lincoln, oh, here we are. Fantastic. Hungary, Nova Scotia. My goodness. And is it warm there or is it still cold? Not quite sure. Scott from Vancouver. Good to see you, Scott. Outstanding. Guys, I'm going to get pretty much straight into it here because I want to make sure that we're respectful of everybody's time. And really just say welcome. Thank you for being here. This is really an update call for all of our incredible Alpha-Flow account holders. And the first thing that I'm going to update you on is that last time we spoke, we told you that we were rebranding from Alpha-Flow to Alpha-AI. Anyone remember those conversations? Okay, well, just to show you that nobody's perfect, we have rebranded back to Alpha-Flow. Now, why have we done that? And yes, don't worry. Next update, we won't be rebranding back to Alpha-AI. The reason we went back to Alpha-Flow was because we noticed that there was at least 3 other companies that were trading under the name Alpha-AI. Most of those had really terrible reviews on Trustpilot. I got contacted by 2 people that knew my number personally to say, wow, well done on your new website. And when I had a look at the website they were looking at, it was one of the other people that had the 1-star reviews. And they were essentially, I don't want to use the scam word, but they were absolutely nothing in terms of the technology that we offer. And there's a lot of these around. You'll see companies that are promising algorithms and automated trading solutions and trading bots. And they will cherry pick numbers and use those numbers to entice people in. And then guess what? Accounts blow out. People lose their money. They go screaming online that they were ripped off. Yeah, some of these people paid $10,000 to $20,000 just for this software license and then had to put money in and then watch their money lose. Anyway, it would have absolutely broken my heart if somebody would have watched our presentation, seen what we were doing, gone to the wrong website and given them money and then lost. And I said to the guys, I'm like, there's absolutely no way I could actually trade under the guise of Alpha-AI on there, which again, it's just what it is. So we came back to Alpha-Flow. If you've ever seen any medication called Alpha-Flow, it's not connected with us. Right? That's not what we're doing. But if you do actually look at Alpha-Flow, we are #1 on the Google search, certainly when it comes to this industry. So we are back. And we had to reshoot a lot of videos. We had to redo a lot of PDFs and stuff. But there's no way I'm letting any one of you guys or any one of the people that you know that may join us in the future make the costly mistake of sending money to people that don't deliver what we're actually promising. So there we are. That's the we made a mistake, but we've corrected it statement back out up front. So yeah, Alpha-AI, delete that from your vocabulary. Alpha-Flow.AI or Alpha-Flow.AI is where we are back to the original. Okay. So on that, ladies and gentlemen, the things that I want to cover today are really going to be what's happening in the world of Alpha-Flow, what's been happening recently with the market conditions, as some of you have probably noticed, and really what's on the horizon. I said on our last update that, please hold a space for us because we are in startup. And when you're in startup and when things are moving and it's a little chaotic and sometimes we only know where the gaps are when some of you fall through them, right? And say, oi, I just fell through a gap. So if that happens, let us know. But right now, there are going to be some loose ends just because of how quickly we're moving and how much we want to bring to the table. So please know that this is not a finished product yet. We are in major levels of development. And what are we developing? Let me share some exciting stuff. We have the app coming out very shortly. The app went through a series of redevelopments. We added some more bells and whistles, and we wanted some more testing done. And we've got a little bit of back and forth still with the App Store and Android. We actually had it signed off with the Android, Google Play Store, whatever you call it, you non-Apple people. But there's a few other levels of functionality that we want to build in. And one of those levels of functionality is going to be APIP. Now, how many people already know what APIP is? Anyone been hearing some rumors? Oh, okay. Yes, says Alexander, we're still waiting for it. I know, we're waiting for it too. Right. No, so, okay, anyone that knows what APIP is, anyone want to type in what APIP stands for? Oh, now I'm testing you. What does APIP stand for then, if you know what APIP is? Oh, okay. PIPs are in Forex. Yes, obviously PIP is a Forex term, and we are in the Forex business, but it's not related to those PIPs, although it is slightly play on words. So in that case, I'm going to play a short video for you that is going to announce what APIP is and how it ties in with the app. And I'll be completely honest, we are probably 30 days away. So yes, I'm teasing you again. I wish it was last month, not this month or next month, but we're probably about minimum 30 days away. But I want to introduce you to what the app is going to do and the APIP program that we're building, because it is, oh, look at that, Adrian, almost very good. Automatic passive income programs. Somebody's going to get top marks on here. Let me share with you a quick video, if I may, on here. Let me just go and share my sound. And this is a 3-minute video that gives you a little bit of a insight into what's coming. Let me know your thoughts in the comments. What if I told you that when you join Alpha-Flow.Ai, you can have access to an additional stream of passive income without investing a single extra penny? Welcome to the Additional Passive Income Program, or APIP. Yes, when you sign up with Alpha-Flow, you have the chance to earn even more simply by sharing our system with your friends. Remember, our mission is to help the average person win while tying our success to your success. Here's how it works. If you have an active account with Alpha-Flow, you can extend a special invitation, meaning one where there is no fees or costs to join, to people you know. And if they sign up and fund their account at a minimum silver level, we'll pay you a thank you in the form of 10% of the performance fee that we receive from the profits we make for them. And we'll pay it every single month, for as long as your account is trading with Alpha-Flow. And the best part? It's all tracked inside our app for you in real time. We don't show individual names or amounts for privacy reasons, but what you will see is the total number of people you've referred, the number of eligible accounts you're being paid on, the total amount of money that Alpha-Flow is managing across those referrals, your total rewards earned so far, how much you've already withdrawn, and what is still available. You'll also see how much you've made so far this period. Now, obviously, this will start each month at 0 and build. And of course, it's only accurate on that day, meaning it could still go up or down depending on the performance of the algorithm. But at the end of each month, whatever the amount of money is there, we'll assign that to you. Now, to receive your rewards, you simply click Withdraw, select how much you want from your available rewards balance, and we'll pay it into any bank account as long as it's in your name, and usually by the 15th of the month. Now, you'll also be able to see your entire withdrawal history. Now, you may be asking, why are we doing this? Well, there's two good reasons. Firstly, the more accounts that Alpha-Flow trades, the smarter it gets, and the more we all benefit. But the second is that we believe the best way to grow a business is through referral. That way, we are fully focused on making sure that you are happy with both the service and the results. After all, nobody recommends a bad restaurant or a boring movie. And from a business and marketing perspective, it's just common sense. The alternative is to spend millions of dollars on advertising media, trying to convince people we don't know that our program is the best there is. That's what nearly everybody else does. Here at Alpha-Flow, we'd rather take that money and instead of giving it to media companies like Facebook or Google, we'd rather give it back to you. That way, you win, we win, and your friends win too. So, how do you start? Super easy. If you click the invite button in the app, you'll get a unique link to share via text, email, or WhatsApp that sends people to our website so that they can look and make their own decision. You can choose one of the template messages or write your own. There's no hard selling, no pressure, just a simple way to let others in on this incredible opportunity free of charge. Remember, the more you share, the more you can earn, completely passively. So don't miss out on this opportunity to stack even more income on top of your trading profits. Click invite now and start earning. And there we go. So that is what APIP is about. We're building a referral system in the background. And the reason for that is because we've already had several people share this with their friends, because why wouldn't you? And so we thought we may as well incentivize people to be able to do that. And to Eric's point earlier, you don't need a minimum account. So as long as you've got an active trading account with us, which you can start with $100, then you can be part of the APIP program. However, as you probably did hear me say on the video, we will only pay out qualifying accounts that are at the silver level above. And the reason for that, guys, if you've got 5 people that have put in $100, it's not worth our time. We would lose money calculating that and making payments out on small amounts. So yeah, as an incentive for people to come in at the silver level, if you introduce somebody at the silver level, which is $3,000 trading or more, then they will be eligible under your referral. If they join at $100 and a month later they put in the silver, they're still your referral, and then you will be paid on them from there. So that's all going on in the background. We're all excited, and I will be releasing that when my partners and I are 1,000% certain that when you click refer, it's going to refer, and when your referral joins, you're going to get tracked and you're going to be paid. If there's any water going through the pipe that's dripping out of a crack, it's going to be fixed, spotted, and sorted before we launch. So please bear with us. I'm not a tech guy. I'm a visionary, right? I know what I want to build for you guys so you can go out. And why is it called APIP, by the way? Why is it called the Additional Passive Income Program? Because the algorithm itself is the passive income program. Remember, you're not trading. I'm not trading. The algorithm is trading for you. So that was a little update on what we're doing with there. We're also going to be tying it in with a lot smoother onboarding process. Right now, because we're in startup and because I was excited and wanted to get it to you guys sooner than I could get developers on board to do what I wanted to do, you guys are really lifting the heavy weights. You've been putting in the hard yards. In order to get an active account now, if you're in, for example, with Blackball, you had to download a PDF and follow about 16 different instructions. And while they're quite easy step by step, it's still not really automated as much as we want. So what we're working on right now, and this will be in conjunction for when APIP is launched, your friends will be able to go to the website with your link. If they sign up, they will stay on our website and they will fill in their forms, submit their KYC, and it'll all be done super smooth without having to go through a PDF of instructions. So that's in place. And we want to make it super, super easy. We know that for every 100 people that sign up, there's a percentage that don't follow through because they get stuck somewhere in the PDF and don't get around to emailing support. So we're going to make this super, super seamless, as you would expect an AI technology company to at least be able to do. So we're working on that. All good. And again, if you've got any comments, throw them in. We're going to have a Q&A at the end here as well. We're also launching what we call the Alpha-Flow Prestige section. Now, this is really for people who have $50,000 or more to put into the algorithm. And we've got several of those members as well. We just really want to make it a little bit more white gloves, onboarding. And so they've got a personal account manager to speak to. So if you've got somebody that looks at this and you feel that there'd be more into Alpha-Flow Prestige, then let us know. And we'll obviously give a slightly higher level of concierge service to those. That's all being built in right now for the website as well. I also want to give an overview today on the difference between the offers that we have, which is Alpha-Flow Sentinel, Alpha-Flow Plus, and Alpha-Flow Pro. Say that twice after a glass of wine. So Alpha-Flow Plus allows you to have multiple accounts on different strategies. And in fact, if I pull up our website just to show you, here we go. Right. So if we go to our website, let me come in here so you can see. This is our website. You've got the 17-minute video there, which if you've not watched is an absolute must. This is the thing that your friends for APIP will be watching and you'll be sending them to watch. If you join now, by the way, this has just been updated to the 31st of March. That's the total amount of money that the algorithm has generated since it started, accurate to the penny. These are the profit percentages. And if we come down here, these are the pricing plans. So Alpha-Flow, you can join right now for 0 cost and you get access to Sentinel, which is our lowest risk strategy. But Alpha-Flow Plus and Alpha-Flow Pro are 2 different offerings that actually come with subscription. And Alpha-Flow Plus allows you to go into any of these 3 programs, which trades at higher levels of drawdown, which means higher levels of risk. You'll learn a little bit more about that today. And I know even though Sentinel did very well last month, but it'll allow you to choose. And it's essentially what we call asset allocation. You may choose to have 5,000 in Sentinel, 3,000 in Ranger, and 3,000 in Hydra, for example. And yeah, that will be available on Alpha-Flow Plus. But for that, because it takes more management, it's $99 a month. Again, still nothing compared to what you get out there for the other algo solutions that are on the market. And if you are a professional trader with 6 months of profitability, you know what you're doing. You understand the difference between a 21-day moving average, and a relative strength indicator, right? You understand the difference, between different levels of channeling patterns and teacup and handle patterns. You know the difference between an hour's candlestick versus a 5-minute candlestick, right? If those terms are double Dutch to you, pardon my Dutch friends, then don't even think about looking at Alpha-Flow Pro, right? But if you're a professional trader and you've got a history of trading, Alpha-Flow Pro may be an option because you get more functionality. That's all you need to know. But that's for the pro traders. Okay. So when it comes to what we're doing right now in the market, our commitment is still very much on education. I've been very, very vocal from the start. And please understand, when you're getting a technology that has the opportunity to make you money without you really doing anything other than checking your phone, then people can get excited. I want to take this time to remind you that you need 2 things in order to build wealth. And I'm going to ask the question. I asked this on a webinar on Saturday night, right? If you are interested in making money, give me a 1 in the chat. If you're more interested in building wealth, give me a 2 in the chat. Okay? Look at that. I think we see our audience here, right? In other words, you would rather build wealth than make money. If you want to make money, there's 1,000 side hustles out there, and you'll always be able to make money. The chances are you're already making money at something. But the chances also, and the statistics will show that even though you're making money, you're not building wealth. Because plus or minus 10%, you probably earned the same this year as you did last year, as you did the year before, as you will next year. Why? Because for people that know my work, you understand what a financial thermostat is. You understand what a financial internal set point is. You understand the difference between unconscious patterns that relate to you self-sabotaging if you make more money or finding ways to get slip through your fingers, versus a poverty abundance, a poverty conscience versus abundance consciousness. So I'm still very committed to wanting to bring you some of the best education that allows you to walk around so that you don't walk around looking to make money. You walk around as money. There is a difference. And I can only share with you from my experience, one of the most profound things that has helped me, somebody with no formal education, somebody that never went to business school, somebody that has, whose last paycheck was 35 years ago. Somebody who's managed to generate tens of millions of dollars and always have money and always have the ability to make money. It's not down to me being smart, guys. I can promise you that, right? Yeah, I couldn't spell smart. Yeah, SMRT, right? I can't. It's down to one thing, an abundance mentality. I have a relationship to money that understands congruently that it is an unlimited renewable resource. I can turn it on, I can turn it off when I need it. It's like money in water in a bathtub. Some of you are constantly trying to pour water in the bathtub because you haven't figured out how to plug the holes. Right? Some of you have plugged the holes, but you're still working to try to overflow the bathtub because you don't feel like you've got enough water. But you don't do that at home, otherwise you'd be calling a plumber, right, for all of the leaks. Instead, what if you could treat money or have a relationship to money like you had a relationship to your bath? You fill it up when you want to take a bath, and when the water drains out, you don't have a fear of loss. You don't come from scarcity. Oh my God, look at all that water that's wasted after my bath. No. You know that if you want more water, you put the plug in and you turn on the tap. What would it be like if you were to get rid of just your top 2 limiting beliefs around money? See, that's what I stand for. Right? That's why I want to build Alpha-Flow the way I want to build it. So I can empower average people that have never been taught how to have a healthy relationship to money. And, oh, by the way, as a little side thing as well, we've got some amazing technology that can help you generate money without going to work for minimum wage in some career that you were forced into or still don't like. Is this making sense? All right, this is the message of Alpha-Flow. All right, why did I choose the name Alpha-Flow? Right, alpha is the brain wave frequency that generates abundance. That's where the name comes from. It's not alpha, we want to be the alpha male. It's not alpha because alpha is the first. No, I chose it because alpha is the brainwave state where abundance is formed, as opposed to beta, which is what's known as the poverty brainwave state. Yeah, beta is the poverty frequency. That's what the secret societies call beta. Beta is the area of stress. It's the area of fear. It's the area of certainty. It's the area of trying to control everything to try to make money. Hence, this is not called Beta-Flow.Ai, right? We're Alpha-Flow. And why flow? Because flow relates to how much money flows through a desk in financial terms. But more importantly, flow has its basis in flowing with the river of life. That's what I teach. That's the level of through me. If you're familiar with my work, this is not new to you. Hence, Alpha-Flow. That's why I have the association to the name for the business. And yes, although we were going to move it to Alpha.AI, Alpha-Flow, I'm still very happy with. I hope you are too. Right? Will there be a theta flow and a delta flow? Well, to be fair, at night when you're in deep sleep and you're still making money, you could probably call it delta flow. But that aside, okay, what I also want to do is bring in our resident cerebral quant extraordinaire, the brains behind the Alpha-Flow technology, to explain a little bit about an update as to what's going on with the upgrades that we're bringing into the technology and what happened over the last 7 to 10 days since Uncle Donald decided to throw the world into a tailspin with his tariff announcements. And again, we're not here to argue whether that was good, bad, whether it was a genius 4D chess move or whether he was terrorizing the world for his own ego. That's not the game. No, none of that in the chat, please, right? Go take that offline into Facebook or some other anti-social media platform. But for now, let's just deal with the reality, the fact that the markets reacted in a way that nobody saw coming 30 days ago. And that caused a lot of problems for a lot of people. How much of a problem did it cause for us? Well, in order to answer that and more, let me welcome to the stage my incredible dear friend and business partner, Mike Godfrey.
Hello. Thank you for that intro, Peter. Very, very nice and kind of you.
You're very, very welcome. We need to make you bigger. Let's have a little look. Uh-huh. There we go. And, I will
Here I am.
defer over to you as well. There we are, sir.
Perfect.
Mike, what have you
Thank you
got for
very
our
much.
incredible Alpha Flow account holders? And I know we're going to get to the Americans as well. I know some of you are here. I know some of you are being very patient. We're working on in the background. Yeah, hold the line. Yeah, team, hold the line. But for the rest of you that are trading and are putting your money where your mouth is, over to you, Mike.
I say thank you, Peter, for the intro. And it's definitely been an interesting couple of weeks, to say the least. So I've prepared a couple of slides that I'm going to share with you, just to give you a bit of the background. Not too heavy, a few minutes, but hopefully this will provide, like I say, some good background on where we're at, what happened, and yeah, like we say, how we performed during that period. So I'm just going to kill my camera for a second and share this screen, which you should all now be able to see. So most of you have probably seen who I am before. So very quick about me. My name is Mike Godfrey. I'm the CTO of Alpha-Flow.Ai, but my background is in cybersecurity. Like I said, I'm not going to go too much into my background. I've got a very strong background in cybersecurity. But we're not here to talk about that. We're here to talk about what's happened in Alpha-Flow. So I want to start off very quickly with some statistics. So this is some rough performance statistics from what's happened since the soft launch, really, of Alpha-Flow. November, barely traded, 1.12%. That was the US election. December, 4.51%. January, 4.74%. That was the Trump inauguration. February 5.2, March during the UK budget 2.49, and April so far has done 3.11%. So for those of you that joined early on, total of 21.17% in 4 very tough, highly disrupted months of trading, an average of 4.23% per month. So that alone is something that we as a company are extraordinarily proud of. But that's great history. What about more recently? Well, firstly, what happened in the world? Most of you would have seen news stories like this, as Peter says, the dreaded Trump tariffs. But I woke up to notifications like this. So US tariffs impact currency, basically make some trading decisions now. And yeah, like I say, more news stories about things that were going on in the market, which from what I read and from what I saw was some of the worst days since 1997, beat COVID, beat the 2006, 2008 recession. So to say that it was a difficult time is an understatement. But what does that actually mean for currency pairs that we trade? Well, this is what it meant. So this may mean something to some of you or may not, but what we're seeing here is a 5,000 point move in 48 trading hours. So huge amounts of movement in the currency pairs that we trade. Now, to put this into context, what happened to other Forex accounts? Now, in this whole thing, completely open book, you can go and do the exact same thing that I did. I searched on X for account blue Forex. And if you go to the latest, you will see a huge amount of posts from people saying they blew their account in Forex, they blew their account in gold. And this isn't one, two, three stories. This is a huge amount of stories. And obviously, if you change those search parameters, you're going to find similar things. So to say it's been a tough time for algorithmic traders and traders in general is definitely an understatement. But obviously, we're not new to this industry. We track a bunch of different accounts. One of those that we track, I sat in a room with somebody. He looked me straight in the eye and said that they will not have more than 2 to 5% of drawdown. Now, this is their account, 62.61% of drawdown. So they have far, far exceeded their aim of 2 to 4%, and they've actually made a loss at the moment of $23,500. So very, very difficult trading conditions for them. But I'm very lucky to be in Dubai at the moment. John Murray and I, who's on the call, went into some brokers, and it was a common theme throughout all of those brokers, huge amounts of losses. First one that one broker mentioned was $3.5 million loss in a day. So huge, huge losses. But one of the things that we spoke about before was Peter's account. So firstly, I want to make something very clear in that Peter's account is run in the same way to PAMM accounts that all of you guys are in, with the same code and technology. None of us use any special super advanced version. what we use is what you use, but there are some differences. So Peter's account is reasonably static in that he has had an amount of funds go in October last year, whereas PAM accounts grow every day. So they do have to be treated slightly differently by the algorithm, but fundamentally they're exactly the same. Now, what happened with Peter's account? Not much to report other than slow and steady growth, as we'd expect. So here we can see that growth throughout November, flat reasonably because of obviously what happened in the market with the US election, etc. But good steady growth. That's a very good result. Now, Peter obviously went through this entire trading period, and last Friday, and in fact in the week before, saw a percentage drawdown, which I'm going to come to in a minute. And Friday, we were very lucky to have this exchange where, quite simply, Peter was all out of trades and at profit. So when we're hearing all of these horror stories and things are really, really bad, we're still making profit throughout the entire portfolio of our algorithm. But again, this is all open book. We can see previous weeks of trading, previous days of training, etc., etc. So we can see everything, like I say, fully open, performance, trades entered, amount of trades entered, profit, etc. But moving on from that, very famous quote from a very famous man, Warren Buffett. I don't care how much I'll make, but tell me how much I won't lose. It's all good talking about the upside. It's all good talking about profit. But what is the actual risk to accounts? Now, firstly, I want to talk a little bit about drawdown. So drawdown is a temporary decrease in account balance. It is not a locked-in loss. And our entire technology and strategy is designed with drawdown in mind. Drawdown is something that just happens with trading. But when we get into drawdown, we are 100% providing safe, predefined limits. Like I say, drawdown is inevitable in trading, cannot be avoided. It's impossible in a real world live account. So the aim is not to avoid drawdown completely, it's to manage it intelligently with a focus on long-term growth. And you can see from everything that we spoke about that our focus is absolutely very squarely on that. But if we use an analogy that most of you here will be familiar with, rowing a boat across the Atlantic. Now, the current doesn't stop that trip. Sometimes these boats will go backwards in that journey, but it's part of the journey with a future goal of arriving at your destination. So that gives you a couple of minutes on drawdown. Like I say, drawdown is expected by us. It's something that happens in trading and it isn't a problem at all. But to tell you where we're at on our highest drawdown accounts at the moment, Sentinel Bronze, 15.6%, Sentinel Silver, 15.1%. I'm not going to go through every one of these, but our average drawdown at the moment throughout this entire thing is 13.6%. But this is calculated on a range of metrics. Some people will say, well, Peter's account, or the early one that he showed, $2,000 account shows high levels of drawdown. Yeah, that's because it's calculated in his initial investment of $2,000. So, for example, if that was to show 90% drawdown, it actually means that that account has drawn down $1,800. So, what we're seeing here, although that is the equation, is not actual drawdown on accounts. So, we've been within parameters as promised and have managed that perfectly. In fact, if we look at trading accounts for this entire period, we've actually made great amounts of profit. We would have been completely happy with a flat month this month. But like I say, we've made great profit. On these accounts, we've seen some awesome stats. So here we just pulled a report, 2.18% drawdown, 13.65% growth. There's some really, really good stats on profit factor, 2.11. So for every dollar we risk, we make $2.11 with a solid recovery factor, all in the green. So this for us is an absolute result with a real test in a seriously difficult market, which as we've seen on X/Twitter has been really difficult for other people. But in reality, if we weren't using the algorithm that we were using, if we didn't have protections in like counter trade, and if we didn't have all of the stuff that we've utilized, we likely would have seen 100% loss, which is obviously not what we want to see. So that's a quick overview in 8.5 minutes of what happened, how we dealt with it, where we're at. I also want to tell you very quickly about where we're going from here. So as most of you know, 6 years of building one of the world's largest Forex data lakes. I actually did a count on tick data and a bunch of other stuff that we've got, and it's over 2 billion data points strong. So a serious amount of data. If we look how that works, data is extracted from trade environments. So like we say, every trade that we place makes our system smarter. We don't have to do a fair amount of work in formatting and aligning time on that. Then enters our data lake. Then we can start looking at feature engineering, hyperplane placement. We're not going to go through each one of these, but at the moment, all of our machine learning algorithm utilize everything in the back end. So to decide whether to place a trade or not. One of the most exciting things for me to report at the moment is that now we're using machine learning in a very, very sophisticated way to decide how to enter trades, not just verified trades. So where we look at things that Peter may have mentioned earlier, RSI, stochastic ranges, etc., we can now run hundreds or thousands of them before we even get to hitting our machine learning backend. And in the testing we've done, that has been seriously, seriously powerful. So what we're seeing in this screen is precision is extraordinarily high, over 90%. And in 821 trades, we only had 23 false positives, 39 false negatives. So I won't drill down too much into this, but what we see here is that the feature importance is highly on drawdown as opposed to profit. So our focus is on drawdown and risk mitigation as opposed to profit, which is absolutely key. So where do we go from here? We continue to use all available options. So Peter, John, most of the management team here you see on a call. We had a call last Monday, and I said to them, "Are we all around for a crisis talk?" Spoiler alert: it's not a crisis. We jumped on a call, and we said, "What are we going to do?" And we said, "Nothing. Hurry up and do nothing for now." And in all honesty, that's what we did. The algorithm did its work. So we had a huge amount of options available to us. And that could have been that we just continue to use tools. We can look at averaging down, we can look at reducing drawdown, counter trading, all these kind of things. But fundamentally, worst case scenario, we would have just closed out at a loss, 5%, 6%, wherever it was out, and gone again. We can see from the stats that, yeah, that wouldn't actually have been problematic on a long-term goal at all. So to answer this question more formally, where do we go from here? To the moon. Absolutely. And this is a picture that I very proudly took from my driveway with a C-Star S50. So that is where we go from here. But like I say, we're completely open book. So any questions, feel free to ask. And Peter, if there's anything that you feel I missed or anyone, then feel free to jump in and
Now,
add
I'd love
whatever you feel like we need to.
John. If John wants to come in and give a little overview as well, and then what I'm going to do is I'm going to summarize a little more what Mike said, and then we'll go to Q&A on there. So, John, do you have any commentary on that? I mean, you've seen every kind of market there is, from flea markets to FX markets to whatever market. So, yeah, the last week has been a little unprecedented. Tell me what your thoughts are as somebody who's been in this industry 3 decades and has seen it all.
Well, first of all, Mike, fantastic presentation and happy birthday. Today's a very, very valuable day
Today is
to have.
Mike's birthday. I forgot to mention.
Thank you. Thank
So
you.
well done, Mike. And fantastic picture of the moon. It was really good. I'm glad that you took that photo, because when you're like, "We're going to the moon," I was like, "Oh boy, that's cheesy." And then you admitted you took the picture. So it's all very cool. Very, very cool. So I can tell you guys that there's been a few times in the market that really were terrifying, to say the least. And I won't go into all of them because some of them are horrific memories of mine. Okay, so right off the bat, I'm going to say 9/11 was the worst day of my life. But additionally, not that long ago, there was an event which a lot of you can look up if you actually have the time and interest. It was called the Black Swan event, where the Swiss National Bank surprised everybody by saying that they were going to unwind their peg to the euro. So they had a policy that said the Swiss franc was always going to be worth 120 to the euro. And that was the policy for a very, very long time, decades. And they shocked the world by just one random morning saying, "Oh, look, guess what? We're changing that policy." And people got wiped out. I don't mean people like banks, big companies got wiped out. Horrible event. Monday was one of those feelings. I was like, "Oh, good Lord, here we go again." And there's people on this call today, this evening, or depending where you are today, this day, that I spoke to over the week, saying to them, "Please, just be careful. Just wait. Just hang in there. If you are that worried and you don't believe what we're doing and you don't see the value in it, it's okay. We can turn you off." But I'm proud to say that everyone's stuck in there. everybody actually got to live through what is so strong and valuable about what Mike has created. This is one of the only, if in my experience, it's the only algorithm that is very much based on forward first risk mitigation and risk management. Every other, almost 99.9% of the other algorithms are designed on execution first. And this is risk management first. Now, of course, every time we tell that story, it gets out more and more. So we're going to hear other people saying the same story. They're going to copy what we say because we are trailblazers in this market, and we're all very excited that you're along the ride with us. And right now, let us work out some of the details regarding the technology for the APIP. I know a lot of you are patiently waiting, and we're asking you to be patient, continue to be patient. And then additionally, the American market's a tough market because it doesn't allow for the type of trading that the algorithm does. It has a certain rule that forces us to come out of the positions very quickly, and it makes it very, very hard. So I know a lot of you are patiently waiting for this another strategy for the United States. Mike and I assure you, are going to roll up our sleeves one of these days and really dig in and figure something out that's going to be really attractive for you guys. But please hang in there. And if you have any questions, everyone that I've talked to, you can tell I am exactly like you see right now. I don't pull punches. I'm transparent. If you need to get a hold of me, you can all get a hold of me. I will talk to you anytime, any day of the week.
Outstanding.
Cool.
Thank you.
Thank you.
Thank you, John.
So,
Appreciate that.
Peter, if I may. So one of the questions about drawdown. So one of the things I mentioned here is that the way that drawdown can be calculated, especially by Blackball and by Vantage, is actually reasonably complex. So let's say, for example, that we've got a $100,000 account and we've got 10 $10,000 accounts, and that account is in 10% drawdown. All of those accounts should, in theory, show $1,000 drawdown on each $10,000 account. But if Peter then comes along and puts $10,000 in, he doesn't then instantly go into drawdown. So the way that it's displayed is quite different to how it's actually calculated. We've asked for a lot of answers on this from Blackball and from other brokers. And what we find is that the stats that we see on effectively the master account are quite different to what some users will see on the PAM account, depending on how much money they've got in, when they entered. So, for example, if you were to enter the PAM now, it'd be very unfair, effectively, for you to go straight into 10% drawdown, but it would also alleviate some of the other accounts drawdown, if that makes sense. So what I would say is that the stats that you've got here on this presentation are completely accurate from the master PAM. Like I say, PAMs are not without some kind of error or issue to users. For example, partial closes, and this is something that we work on all the time. Let's say that we've got a $100,000 account in $1,000 of drawdown, so 1% drawdown, and you've got $1,000 that you want to withdraw and just put into another account, which is fine, leaves the account absolutely fine, no problem at all. At the moment, a couple of the brokers that we work with will have to close you out at a 1% loss. There's no need to do so. It doesn't affect the account. It doesn't change that drawdown parameter. But unfortunately, these are some of the nuances of PAM accounts. So like I say, the stats that you've got are absolutely clear. In fact, if you look at the stats on things that analyze drawdown, like FX Blue, like my FX book, they'd actually be a lot lower because it looks at that initial equity as opposed to where it's at now. So that, unfortunately, is the best answer that I can give you without going too much into the technicalities of it. Like I say, it's something that we're trying to address with different brokers. The same with partial closes. Some brokers will do partial closes, some won't. Some will have a drawdown limit when they won't suffer potential partial closes. So unfortunately, it's the nuances of running a PAM and how it's displayed. But like I say, the stats are absolutely accurate, definitely.
Brilliant. Thank you, Mike. And yeah, guys, for those that aren't aware of what a PAM is, Mike or John, feel free to come back and just share.
Yeah. So a PAM is quite simply percentage allocation money manager. So if there are several accounts that build up the PAM account, whatever your percentage is when you join the account is what you win or lose based on the results of the trading. So if it's 100,000 altogether, there's 10 people, everyone's going to share the 10% each up and down. Percentage allocation money manager.
Excellent. Thank you, John. So it's a simple way of saying that, guys, is some brokers won't take a really small account. And some of you, I want to make this available to as many people as possible. And some of you just want to dip your toe in with $1,000. Yeah. With the level of service we get, the broker won't touch that. So what we do is we build a PAMM account so that everybody goes into that, let's call it fund, even though your own account is individual. So you're still getting a percentage of the win, and a percentage shown in your individual account. The money doesn't leave your account, but it's counted as a group account, if that makes sense. So you're not actually sending your money away into some group account that's managed by somebody else. No, it's still in your account, your control, but it's I guess counted towards what we would call a PAMM figure that allows the broker then to treat it as a bigger account. That would be the best way of explaining, John, or do I get?
Yeah, I think so. I mean, really, in theory, it's the easiest way for someone like ourselves to actually put everyone into one basket, and it's the easiest and simplest way to divvy it up and make everyone else in a fair, equitable share of increase and losses. That's all.
Yeah. Even though it's still the money still remains in their individual account.
Exactly.
Yeah. Cool. Okay, so let me do a little bit of a sum up on where we're at today, and then I'm open for questions. That should take us probably to the top of the hour. And by the way, the reason that Mike and John were in Dubai is not just because it was warmer than England or New York, but because they were actually meeting with additional brokers who wanted to work with us in terms of the technology, the onboarding, being able to solve some of the problems Mike just mentioned when it comes to reporting on drawdown, etc. And we've had some incredible conversations, some very future-willing partners that we're now working with. I don't know what else. I mean, John, you to say that would be a fair comment?
Yeah, absolutely, 100%. I mean, we're working hard to actually expand and grow the organization so we're attractive to as many people as possible.
Excellent. Good stuff. Okay, so from that perspective, let me give you just again a quick summary. We've got a lot of work going into the app developments, which I'm not going to release until it's ready. And when it comes to you being able to share this, we're going to be able to reward you with 10% of whatever the performance fees we get on there. Let's move these spotlights out of the way. Second. There we go. So as a thank you, and as you heard me say on the explainer video, the reason we want to do that is because it keeps us focused on producing a quality of product and service that is worth recommending, right? That's it keeps us honest, it keeps us on form, and it says, listen, if we want to make this recommend worthy, we better get our own act together and make sure it is. So I prefer building businesses that way than trying to just bamboozle people with flashy marketing and misdirected promises. So that's one of the reasons I wanted to put the development costs into there, and so everybody can win. And chances are you're going to recommend it to people anyway. Nadia is so excited about the money she's made so far, she tells all her friends. In fact, usually when they say, wow, that's a nice new outfit you're wearing, she says, well, let me tell you how I bought it. Right? So, you are going to be the story of being able to share that. And it reminds me as well of a story many years ago when a friend of mine called Shay O'Brien was doing very, very well in a business, and he bought himself an Aston Martin. And there was always a guy at school, right? You probably know the one that was always the bully, always the sarcastic, always putting you down. And he pulled up. He was only young. He was in his 20s, but he'd done really well. He bought this Aston Martin, and he pulled up at the traffic lights, and he looked over, and there was this guy at school that he absolutely hated that made Shay's life a misery. And he looked, and the guy's like, oh my God, Shay. And the guy wound his window down, hand winding, and Shay was like, bzzz. And he goes, oh my goodness, says, what are you up to? And Shay looked at him, and the light started to change. He goes, I'm not telling you. And he pulled off. Now, there may be some people you wouldn't want to share this opportunity with, right? Because you don't want them to be abundant. But I'm sure there's going to be many people that you do, right? Hopefully there's a lot more people you want to be able to help lift up than allow them to live in their own lessons, shall we say. But that's coming through. We've got the Alpha-Flow Plus and Alpha-Flow Pro. That's ready to go for those that want to actually look at Plus. And when it comes to performance, Mike mentioned a word to some of you that you may not be that familiar with. It's called counter trading. And essentially, he explained what drawdown is. Drawdown is the amount of money that the algorithm is allowed to play with on your balance. I'm explaining this in a way John's probably cringing right now, but I'm going to try to do it simple as a non-trading guy to most of you, which are probably non-trading guys and girls. So let's just say you've got $1,000 in your account. Now, if you tell the algorithm, I want to cap my drawdown at 10%, that means that once you've got $100 worth of play, which means if your account becomes worth less than 900, it will stop playing until the market moves back into positive territory. Is this making sense? Give me some yes in the chat on there. Jose says, Josie says, nice joke. It wasn't a joke. It was a true story on there. Shay told me that. Right. Okay. So drawdown is the amount. Imagine that you've got a corridor that's really wide, and that is the amount of money that you've got in your $1,000. If you just want to play with $100 and that's all you want to risk, then that's as much as your algorithm can make. It can only make bets with that $100 worth of risk. Now, if the market then moves, what happens? What if your account, you make a buy position and the currency you've bought 2 days later is worth less than what you bought, and now your account is only worth $900, it's not the original 1,000. Well, that's okay if you say, right, stop trading. But what if the market continues to move? This is what's happened over the last several days. Well, now you can't stop it because your account's now worth 800. You haven't made any more trades, but the trade that you made is carrying that loss into bigger and bigger territory, right? And that's what Mike showed you, where one company that only wants to limit their loss to 2% is now in like 40 to 60% drawdown, right? And that's where most accounts got blown out. So what does Alpha-Flow do? See, what most algorithms do is they try to build the position, meaning, and this is a very simple roulette strategy analogy. Let's say that you bet black or red, and for the sake of argument, it's 50-50. We know it's not quite 50-50. Let's say it's 50-50. And you lose, you bet $1 and you lose. So what do you do to try to get your money back? You bet $2 the next time. And if you lose, you bet $4 the next time. That's how a lot of people try to cover their losses. So many algorithms start to build positions that if you lose, you're going to double up so that when you win, you're at break even. Now, the challenge with that is that it's not the first 2, 3, or 4 bets that lose the account or clear you out, is it? It's bet number 10, 11, and 12, because now you're having to put so much more money on to try to cover your losses that you can't keep doing it. And that's how most algorithms trade, and that's why they get blown out when the market moves too far too quickly for them to try to grab money to shore up the positions. Alpha-Flow doesn't do that. That is gambling. That is hoping that the market will turn around, but if it doesn't, we're screwed. And a lot of people got screwed at these last 7 days. Instead, what Alpha-Flow does is it counter trades, which means it will then hedge. Let's say your account at $1,000 is now only worth 900. So instead of just stopping and hoping it doesn't get worth less, Alpha-Flow will then buy a position that means if it goes down, you win. If it goes up, you cancel it out. And there is a proprietary level of algorithm, which I'm not going to go into, that is unique to Alpha-Flow that Mike has built in that says it's not just covering and counter covering, but there's actually profit and risk management built into the counter trading that makes it even more secure. So like you saw with my account, I wasn't sure I was going to show that screenshot because that wasn't meant for a webinar, right? Where I put, holy crap, we're out of all positions and at a profit. Because the counter trading and the way that it worked mean that not only did it hedge, but I made a profit when it came out. That is insane. All right. And by the way, at one point I was in, for my account, $120,000 you saw there. I was in over $9,000 drawdown before the algorithm says, whoa, that's the maximum limit that we're going to risk. We're now going to start counter trading, so you can't go any further down. And what happened? It swung back. It bought ourselves out of trades. And then boom, we closed out on Friday, as many of you saw on your accounts, at a profit. Insane. It's great. And we wanted to break even this month, thinking that if we break even and don't lose, oh my God, that would be the biggest win and the biggest validation of our technology. And guess what? We're already at, was it Mike, 4% for April?
I believe so, around that. Yeah. It's been a good month so far. Obviously, we've capitalized on it. So one of the questions that Seb just asked, sorry to jump in, Peter, but was counter trades. Yeah, counter trades can sometimes cause issues. Long-term hedges can still lose due to platform fees. And that is absolutely 100% true. So what Alpha-Flow actually does in the algorithm is expands that trade move. So for example, what some people see is that we've suffered quite high swap fees. So swap fees are the difference in price effectively between two currency pairs that we trade in. And the algorithm takes that into consideration. So to cover those small swap fees, commissions, etc., it just moves the position slightly. So it considers all of that in a smart way as well, definitely.
Yeah. Kim is asking, is Sentinel trading today or dormant due to the market volatility? I checked my account. It's not been trading since the market's open, since we closed out at a profit. I think it's taking a step back just to assess the viability now rather than risk as any other positions. But again, we're already at 4% over, 4.23% see there for the month. And trust the algorithm. It knows more about market volatility than you and I. Right? It will decide the best time to step back in. And if it sees something that ticks the box, that this is a high probability based upon all of its smarts, it'll step back in. If it's not trading, then be thankful, because most people, in terms of the human aspect, right, they get itchy fingers. They're like, oh, well, I'll try to trade this part of the market, or I'll try to catch the upswing. I'll try to do this. If the algorithm isn't trading, it's because it's seen things that you haven't seen or the other people haven't seen. So it's saying, if you get in now, there's a high probability it's not going to do as well. Therefore, hold your breath. And that's one of the things we like. John, did you want to come in?
Yeah, I just wanted to state that when you, for whatever reason, the FX market seems to really compel people to be impatient and to really want to push their money around a lot. And I'll give you an analogy. If, let's say, for example, you owned a stock and that stock was worth $100, okay? And let's say that stock was in a blue chip company, let's call it Apple. And the value of that stock came down about 10%. So now you're down 10%, and you're looking at it and you're saying, that's okay, it's Apple. I believe in Apple. I believe it's going to come back. I can wait. I'm going to ignore it. But with the FX market, people see the movement of the chart going up and down. They're like, oh, what's going on? And they feel the need to, okay, I'm going to take that loss. I'm going to go in again. I'm going again. What we want you to do is trust the algo, trust the artificial intelligence machine learning system that Mike has created, and sit back and just relax. Another great example of being relaxed and very patient with the market is Peter Sage rode across the Atlantic. It took him almost 50 days, 2 hours of rowing on and off for 24 hours for 49 days. And during that time, he never looked at his account, not once. And there were days when it was drawdown. There was days where it's negative, and I was busting Mike's chops like, oh man, when he gets off that boat, he's going to come skin you. But sure enough, the market and the algorithm and the AI work together. And by the time Pete got off the boat, how much was it up?
$10,000. I made 10 grand rowing the Atlantic. And John, that's a great analogy, and saying the one that Mike used earlier. There were certain days where I rode my ass off and made 0 miles.
Yeah.
Right? Because, and there's been times in that event where somebody has made 70 miles one day and they got blown back 75 miles the next day because of weather conditions. However, everybody got to Antigua. So this is not a get rich quick. This is not a, oh, I'm going to take money out every week because it's now replacing my job. This is a slow and steady part of your asset allocation so that you know that over time we become the house, not the gambler. Yeah, and that's a very important analogy to understand. See, if a casino owner is watching people at his roulette table and they're betting that black and red again, and then he's going to have to watch. We know that the house wins 51% of the time and loses 49% of the time when people are betting black and red because of the zero, the green zero that you can't bet on when you're doing black and red. So what happens is the house owner, the person that owns the casino, knows that $49,000 has to walk out of his casino in order for him to make $51,000. And he's very happy because mathematically he is guaranteed profit over time. But if he freaked out every time somebody left the casino with 10 grand on the black and red, he'd never be a casino owner. He'd have died of stress and a heart attack, right? You got to trust the math. And when it comes to, in fact, I'm just going to bring it up. There's something I want to share with you here on my account, right? It says he looking at it. This wasn't planned, but I'm just going to bring it up. If it was planned, I'd have had it in place already. Let me just bring this up here. Right. Yeah. So let me press my magic button. All right. So here you'll see this is my account live now on FX Blue. Right, that's my current balance, 124,441. And by the way, it says equity 135 because I was given $10,000 as a bonus when I joined because I put 100 grand in. A lot of brokers will do that to tempt you in, just like a lot of gambling houses will give you a free $10 bet, right, to start off with because they know most people will lose, right? So, but I haven't touched that. I'm just, what's actually working out is not my equity, it's my balance. So I started with 100,000. Yeah, I'm up 22.4%. My peak drawdown, by the way, was 0.6%. But if we go to this one here, this is the important tab, risk. This is why Alpha-Flow is different. If we look here, all right, there we go. Risk, size of loss. I have had, even through the last 10 days, the probability of me losing 10% of my account is 0.0%. Welcome to Alpha-Flow's counter trading. That is unheard of. But what's an even more impressive statistic is this one here. The risk reward ratio on my account, this is since October, by the way. So over a lot longer period than some of you have been trading, but with the same algorithm, the same technology. So forward your account potentially for several more months. For every dollar that I've risked on my account, I've gained $7.08. That's insane. That places me higher than the top 0.1% of professional traders on earth. And as John said, I've never made a trade. Right. So if we've got time for Q&A, guys, please, we've got John, myself, and Mike here. We're going to run for probably another 10 minutes. If there's any questions, please raise your hand on Zoom. If it's a technical question, we've got the people here. If we've got other questions I can help with as well. Wayne Sparshu raised his hand. Wayne, are you able to, where's Wan? Where's our magic tech team? If you could bring Wayne to the front of the class so he could ask the teacher a question, I would greatly appreciate that. Do we have tech team, Atient or Wan on the call? Two others raise their hands. And if my tech team are AWOL, then
Wayne needs to accept the promotion to panelist, but Paul is accepted, so Paul can go ahead.
Okay, Paul, feel free.
Hi, thanks team. Just unmuted. Hey Peter, how you doing? You okay?
Yeah, I'm doing great, thank you.
Yeah, I'm really thrilled with Alpha-Flow. It's been incredible, and the onboarding has been really simple. My question is, I've got a fair substantial amount of money in there. If I wanted to invest more, do I put that in the same account or do I open another account? How does it work?
That's an amazing question for probably Tasmin, actually, if Taz wants to take that. And some of you have spoken to Tasmin. She is our resident omnipresent superwoman, is probably the best way to describer on there. Taz, do you want to take that one on? You weren't expecting to answer questions, but feel free to comment.
Hi, Paula. Sorry, can I hear the question again? I was looking at the chat and answering questions there.
Yeah, so I've already got an amount invested. If I want to put more in, do I do it as a new account, or do I top up the account that I've got?
If you're looking to trade with a different strategy, then you can create a new account. But if you're looking to just use the existing strategy, so Sentinel, you can just top up your your existing account.
Okay, and I do that through Blackball and
Correct.
just shoot the money across. Brilliant.
Correct.
Thank you. Thanks so much.
So, okay, who else do we have?
Hey, Peter, come on.
Who was that?
Who's doing that? That's gotta be.
Okay, was that Aaron?
Yeah, hey, how you doing?
Hey, Aaron, I'm good, thanks.
Hey, I'm actually based in the US, but I'm a New Zealand citizen. And of course, I'm waiting for the US side of things to kick off. Is it possible for me to trade through New Zealand, or being a US tax resident, does that preclude me from being able to trade in other countries?
I'm going to defer to John for that one, who's got more experience.
Yeah. So the way the rule works, which has now become a law, it's a U.S. resident is the issue. So as a New Zealander with a New Zealand citizenship, do you have New Zealand residence any longer? And can you show that in a bank statement or a government issued statement?
I'm with you. Well, no, I'm solidly a US resident now.
Okay. So there's no family member, there's no one there that, and again, I'm not teaching you how to circumnavigate the details,
I mean,
but really what you need is a lease, a rental lease, or anything that's going to be mailed to a post box where someone can actually scan it and send it to you.
Okay. Yeah, I mean, there could be go-arounds, and I guess I could open a New Zealand company again and do it that way, perhaps.
That's the easiest way to do it. And the reason why I tell you that is because with the US situation on the FX market, there's a rule called first in and first out. And I don't want to bore everyone too far and get down this rabbit hole. But what that means is if you buy a currency pair on Monday, and then you look to buy it again on Tuesday, but then when you look to sell on Thursday, you have to sell your Monday one before your Tuesday one. I hope that's not too confusing. It's called first in and first out. And it makes it near impossible to trade the Forex market effectively in the United States. When I live here again now, but I lived in England for 12 years. And the reason why I moved to England was because of this rule. The system here had about 450 brokers. Now we have 2. So it completely wiped out the market. It's the world's largest market, one of the smallest industries, and the world's largest economy does not participate because of the Dodd-Frank law. So again, we are working on ideas, and it's not going to be very fast. And I know that you're all very excited because the AI system that Mike has created is so powerful. It's very likely going to be another product. And if you can just bear with us, I don't want to make any promises and get you overexcited. You know, Mike has to answer that. I really can't tell you how his brain works. It's a phenomenal thing.
Yeah,
I think that pretty much sums it up. So I can see where you're at. So it's really about in my case, trying to find a go around.
A broker, from my understanding, if you submit a US proof of address and a US driving license, whatever, to a broker, they will not onboard you because they're aware of this law and they could get penalized with regards to compliance, right? So that's it's like serving alcohol to under 18s, right? Now, if
geez, we're just having an earthquake here, California.
Oh, there we are.
Sorry,
Look at that. Rocking the house.
Yeah, so I guess I have to keep it separate. So if I'm going to do it offshore, I just have to keep it separate from my US tax return. Oh, there's the alarms going off.
If you present to, I think is it Alchemy that does Canadian New Zealand, John, or equity?
Yes, it does. It's Alchemy.
Alchemy, right? So if you open an account with Alchemy and you provide them your New Zealand proof of address. And they're happy with that for their compliance, that's different. But yeah, no broker will take on a US proof of address or ID, as it were.
Okay, great. Thanks, guys.
Yeah. Good luck. Hopefully everyone's safe.
Okay, let's go to Therese.
Hi, Teresa. Hi, Peter. I'm
Hi.
a big fan since the Inside Track.
Oh,
So
thank
I've been
you.
following you for a while now. I've also done the Millionaire School just for $1. So thank you for that one.
Ah, you got in well. Good
Yeah,
timing.
yes, I did. Yeah. And that's how I got to learn with Mike and John. So hello, John. Hope Mike is still there.
Yeah.
So I've already signed up somebody. I'm going to sign up Christian. This is going to be my first one that I want to sign up.
Outstanding.
So I can't wait for the app, to be honest. Is there a possibility for translation for Dutch? Because I'm from Holland.
When you say translation, for what specific? You mean for the actual video?
Yeah.
Yes. In fact, it's already in Spanish. I haven't even told my partners yet, but we've got the VSL in Spanish right now. And with the way technology is, it will be multi-language as we move forward. It's a lot easier to do this than something like MBS or EMF in different languages.
Okay.
Right? Because all you've got is a video, a website to translate. See, the currency market speaks its own language.
Okay.
Right.
And I'm speaking to Kevin for I've done all the I did the 11 pages and stuff like that. So from now on, it's going to be simpler.
It will be, yes. We're working on solutions as we speak to make it all done through the website, nice and easy, without you having to follow the kind of baby step instructions that we've got at the moment. So
that would be good.
All of you guys that are on will be able to tell your friends, when I joined, I had to go through 16 different steps on
exactly. Yeah, that's funny. Yeah.
Walk uphill in the snow.
Yeah, it's not multi-level marketing, I understand, but I think I've got about 100 people that I'm close to, so I do know how this market thing works. So yeah, it's going to be
Everybody refers. You get a kickback at Starbucks, you get a kickback at Amazon, you get a kickback on pretty much everything, because why? It's a marketing cost. We bill it as a marketing cost, and why not? But as I said, more than anything, it keeps us honest in terms of being able to maintain delivering a product that people are happy to recommend.
Yes. And then I'm on Hydra, at least I want to be. I put 25,000 in because I thought things were going so good. So I sort of put my inheritance in there. I'm just going to go for it. I trusted this 100%. So, but I haven't gone into Hydra yet. Is there anybody who, because I've been asking for a week now, and last week I put 25 in and I'm not in Hydra. Why am I not in here?
Tasmin would be the person to speak to.
Hi, Tasmin.
Hi, how are you? So
Fine,
at the moment, we're just waiting for the new tiered system accounts to be live. This should go live, I think, by tomorrow or the day after. As soon as it is, Kevin will contact you to proceed with the transfer from your wallet to your Hydra account.
Champion. Great. Right.
No problem.
Right. Thank you. And I'm off as well because I got to go and teach my body fit. So I'm going to be off. Thank you so much. And I have recorded this, so I'm going to look back. Thanks, everybody. Bye-bye.
You're very welcome. Thanks.
Bye.
Bye. Let's go to Sebastian,
I'm really going to
and then we'll do Eric Brox.
Yeah.
Hey, Seb.
Hi, Pete. How you doing?
Good, thanks.
So, relatively quick question, I think. So, I've already got a Vantage Markets account, and I'd love to be able to make life easy, set myself up to win, and not have to go through all of the validation and security setup and all that sort of stuff. Can I transfer that across, or do I need to set a new account up with either Vantage or Black Ball from the link within your page?
Sounds like a Mike answer, or no? He was going to unmute. Yeah.
Oh, I'd hate to put it on Tasnim again, but it's going to be Tasnim, I think, because it depends where you're located, Sebastian. So unfortunately for Tasnim again, I'll defer to her for the answer. She doesn't mind.
That's fine. So if you're based in the UK, you unfortunately can't use Vantage. You'll have to use Black Ball.
Okay, no worries then. Yeah.
Yeah, I had a Vantage account as well, Seb, on there, but I've also got a Black Ball account now.
Right, no worries.
Again, we're working hard on creating various different partners because we are ultimately broker agnostic. You know, we don't get a kickback from Vantage or Black Ball. Right? It's not like we're incentivized to use them. We just want people that are willing to work with us and really help grow. And we're looking now for what the vision is. The vision is I want to scale this to be able to help over 1 million people become more financially independent. Yeah. not financially free. That's it's there. It's not a money making, going to solve all your problems, buy a house tomorrow. That's not what this is. But financial independence is an ability to generate money outside of somebody else's control, like your boss, for example, or what have you. Yeah. So if I can help people do that with this and teach them how to have a better money mindset, it's going to empower a lot of people, reduce fear, increase love. And that's what I'm about. So we're working with brokers that can handle that scaling level, because I'm chomping at the bit. Yeah. I mean, you've been to MBS enough times. Yeah. I know how to build businesses. Right. I see the vision. I know where to go. I've got the right partners on board. Yeah, we're all excited. Mike and John have just worked their tail off for 10 days in Dubai. Yeah, to build relationships, talk to people. Yeah, we're hiring new technology partners. There's a lot going on. I wish it was done yesterday. We live in the real world. It's going to be not quite yesterday. Right. So bear with us. It is going to be a case of there's going to be more choice and more brokers coming through. And that'll give people a lot more of a level of options. But for now, Vantage UK and how our algorithm trades is not, and with the PAMM, it's not working as well as we want to give you the service we want. So therefore, black ball's in the game.
Perfect. Thanks, guys.
You're welcome. Eric? Oh, sorry. Let me do that again.
We have to agree to unmute.
There you go.
Yeah. This seems pretty bulletproof. In the top 0.1% or better of pro traders, that's pretty hard to beat.
Well, I say bulletproof. The skills that the algorithm has far exceeds human capability. Let's frame it that way.
That's my point.
Bulletproof.
See, as far as I get it, the trading is done electronically by computers, and the computers are trained to be more and more experienced, and it's working absolutely fantastic. Mm-hmm. But there must be a human in the loop somewhere, someone that says, we're not going to train while there's the presidential elections in America and so on. So what makes it sure that it's going to continue as it is?
Mike, do you want to comment on that one?
That's definitely one I would love to comment on. Absolutely. So I'll just put my camera on actually so you can see me. So it's a great question. And is there a human in the loop? Yes, somewhere there's a human in the loop. No, in reality, a human couldn't place these trades. It's impossible. So a human doesn't place these trades. What we're really talking about is training the model. So firstly, when we talk about risk, and I think it's important to understand, people say to me, what is my risk? Well, I actually say 100% of your money is at risk 100% of the time. Now, why do I say that? Because if you put your funds into Blackball or Vantage, they're not our company. So if Blackball has something happen or anything like that happens, we only use regulated brokers. But what can we at Alpha-Flow say about a third-party broker? No, it's not a guarantee we can offer. What we can say is in the trading technology, we know that back to front, inside out, and backwards. In terms of how it's trained, we absolutely train it on data from elections, from budgets, etc. And the way that I describe this to people in meetings is I say, right, if I show you a trade that's made $1,500 profit, is that a good trade? Everybody says, yeah, that's a great trade. But it's not if it risked $5,000 to make $1,500. So what the data lake does effectively is trains our back end into what is a good trade and what isn't a good trade. So that will say, right, is this a good trade where it's made profit, but the drawdown was lower than the profit it made? It then looks at volatility. Was it a good time to enter that trade? It looks at a bunch of different parameters and then gives it a binary output of a 1 or a 0, good trade or bad trade. And you'd be surprised how many trades from previous data in profit come out as a bad trade because they risked a lot more than they made. What that then does is every account, every trade builds a decision tree, and those trees effectively vote when a trade's entered. So when it enters a trade, we use the technical indicators that Peter mentioned, RSI, stochastic ranges, exponential moving average, MACD, moving average, convergence, divergence, standard trading stuff. Then what we do is cross-reference it to the back end and say, right, this is the trade we're going to make. What do you think? And then every voting tree then votes on whether it thinks it will be a good trade or not. What's the volatility? What's the market move? What news is coming up? Have I seen a trade like this before? Et cetera, et cetera. Then it looks at a general consensus. So only if that threshold is met for a consensus will it enter that trade. And then that's the way it's effectively managed. But look, we're dealing with a software solution. So the algorithm itself, yeah, it's solid. We've proved that time and time again. The main thing that our algorithm is controllable and manageable. So like we said with Warren Buffett's quote, we know what we're getting into. So that's the biggest thing. Like Peter said, with algorithmic trading, a lot of people can't control it. They can't scale it properly. They can't turn it off. They overtrade. And that's a major issue. So, yeah, look, I'm extraordinarily proud. And I say this a lot about where this is and what it's done. And even during this week, I was meeting people in Dubai, meeting friends that know I've got this algorithm. And they say, how's your algorithm doing? And I said, here's a live link to track it. And I said, I guarantee to you that in the middle of all of this, no one is sending you a live link to track their accounts. So, yeah, like I say, I'm extraordinarily proud of what we've done. And it is phenomenally powerful, without a doubt, definitely.
So I gather that it's pretty much all computer control, but with a little overview from humans.
So I would love, and I say this all the time, I would love to tell people that I wake up in the day with 4 screens of charts, doing everything. In reality, we click run and stop. That's pretty much it. And even then, all of the parameters are loaded. So how much it trades, when it trades, auto widening before trade. So it doesn't just trade and trade and trade and trade. It will sit back, volatility indicator. So it will look at volatility. We couldn't have involvement. And you should probably be worried if I was telling you that we do have to manage this day in, day out. Of course, we have oversight on it. So we check accounts quite often. We check the equations are right on it. We also make the technology better. The technology we're using now is not necessarily what we were using 6 years ago. Things move on and evolve. So, yeah, we definitely do have oversight of it. But I say to people, look, it's not a work from home scheme. You can't work harder. And it just doesn't require our oversight every minute or every hour. We're far more focused on developing the core technology that we deploy as opposed to managing trades. If we were managing trades, it would be a major issue, definitely.
Okay, thank you.
I've got, while you're on mic as well, I've got a few questions I'm looking at in the chat. I don't know if people have, say the team are going through to answer them. But there's a few things here. We had another question from Merlin Matthews about, he says, Hydra account showing 25% drawdown. I think if you must have missed Mike's response to that earlier, if that's showing in your account, the max drawdown we've got, Hydra does have a higher drawdown than Sentinel. That's why it's got a higher return over time. But what you're seeing in there is not your individual account. Am I right in saying that, Mike?
Yeah, it's not the global drawdown. So like I say, if there's people that have entered the PAM later, unfortunately, it's not an exact science with PAMs, which like I say is one of the limitations. So if an account's in 25% drawdown now, and I put $1,000 into that PAM, I'm definitely not going to see $250 drawdown within the first minute on day one. And let's look at it on the other extreme. If I drop 10 million into that $100,000 account, for example, your drawdown isn't going to drop to 0.25%. So yeah, like I say, unfortunately, it's the way that they generate it in PAMs and the way they display it, which is not an exact science. But yeah.
There's also a question from Robin Webb. He says, last call, Peter said he had $18,000 profit while he was out rowing. This time you said 10,000. Please explain. Happy to explain. Here's one I made earlier. Let's take the chat out of the way. So this is the day that I stepped on to the boat, which was the 11th of December. Now, at this point, I'd already made 8,000 profit, as you can see there, on my 100. Okay. When I stepped off the boat, it was 118. So yes, I'd made $18,000 in total, as you can see there, but I'd made 10,000 of that while I was rowing. Hopefully that gives you a better understanding. So yeah, I'd made 18 grand, but 10 of that was while I was actually rowing, but I'd already made 8 by the time I stepped onto the boat. Let's have a little look. Do you find drawdowns and results differ in different brokerages? Is it the same across the board? Well, the drawdown is based upon the algorithm, not on the brokers. What the brokers will do is the brokers can take different amounts of fees. So people say, oh, does the broker take a fee every time it trades? Yes, it does. And this is something that I learned from Mike as well. And you want the brokers to take fees because there are 2 types of brokers. There are A-book brokers and B-book brokers. A-book brokers are people or brokers that if you win, they win because they've got different liquidity providers that are underwriting the actual trades. So they make their money from taking a little commission every time you use their platform. B-book brokers operate differently. B-book brokers essentially fund the winning trades themselves out of the losing trades of the money they keep. In other words, if you're with a B-book broker, they have a financial incentive for you to lose, whereas an A-book broker has a financial incentive for you to keep trading. So that's why, you know, we use A-book brokers. But the profit that you see in your account from Alpha-Flow has already deducted, i.e. taken into account any broker's fees on that trade. So therefore, what you're looking at is the actual result, not the actual broker. So brokers can charge little bits here and there, depending on, some may charge slightly more per trade or slightly less. And we're talking, you know, minuscules of a percent. But the actual drawdown is governed by the strategy of the algorithm, not the broker. And John, Mike, I guess I'm right in saying that, correct?
Yeah, you're spot on.
Yep.
Got it.
One of the questions quickly, so from Alexander was saying, if your profit is 1.5k and your potential loss is 5k, the chance of winning is, say, 80%, then it's worth it. And look, that may be the case. But that's not really a game that we want to play. You know, we have a very good success rate. We just want to be slow and steady. We want to enter trades that come out on more profit. And it's that strategy where you see Peter's risk reward ratio of 7, which, like I say, look, with anything, you can go and Google this. You can go and search the Twitter X parameters that I put in. You can do all of this on your own, and you'll see the exact same thing. 7 as a risk reward ratio is phenomenally high, really, really high. And like I said, it's all completely open book. So yeah, look, that may be true, Alexander, if that's a strategy that you'd want to go with. But for us, it's just not the game we're in. We're in slow and steady.
Yeah. One final point I want to make here, guys, which is a very important point. Right? Some of you may be thinking that, wow, we found the magic bullet. I want to draw you back to the casino analogy. Yeah, we have to lose a certain amount of trades because nothing is 100%. The key here is not, do we always win? It's for every dollar we risk, how much do we potentially win versus lose? What is our win strategy overall? The casino is the only business model in the world that is guaranteed to be profitable mathematically. That's a casino. That's why it's so mafia run. That's why it's so protected. Why? Because casinos are guaranteed to make money mathematically. No other business on the planet, whether it's Microsoft or McDonald's, can say that. Right? We've had Oil-mageddon, where oil was negative at one point. No business in the world is guaranteed profitable other than a casino because it's playing mathematics. The fact that we are in the FX market, whether you are a gambler, which 80% of people are, and if you were to Google, by the way, percentage of FX accounts with a broker that lose money, you'll usually come up with about 80% as an average. Why? Because they're walking into the casino gambling. The house loves those people because the house is guaranteed to make money over time. Now, does that mean that the house doesn't lose occasionally? Of course, but the owner isn't worried. He knows that $49,000 has got to walk out of the door in order for him to get his 51. Why am I saying that? There may be times, listen to me carefully, there may be times we look at the PAMM accounts, your account, where you may be in drawdown or you may be at a position where the market has shifted. And therefore, you're holding a position, but it may be 2 months before the market recovers. Your risk is mitigated. Maximum, let's say, 10% drawdown before the counter trades are protecting you. So you are not trading until the market moves and you're just holding steady. Now, it may be, depending on the level of drawdown, that our trading team, Mike and Anthony, who's also on the call here as well, may turn around and say, hey, listen, we may choose to close out your current trades and give you a 3% loss today. And we will do that if we feel that you're going to be static for 2 months. And in 2 months, you'll be back to zero, so you've not lost anything. Or we can take a 3% loss today, bearing in mind you've made 8% over the last 10 weeks. We will claw 3% of that back. take a 3% loss so that you can start trading today and continue on a winning strategy rather than wait for the market to move. Does everybody understand that? Now, it's rare. We haven't made that call. We may have to have made a call similar to that, depending on what would have happened last week. Yeah, and by the way, we will inform you before we do it, right? Yeah, and you're free to take your money out at any time and close out whatever losses or realize your drawdown into a loss if you do that. If the property market goes down and you choose to sell at that point, you're going to take a loss. But if you don't choose to sell, you've not lost anything. Yeah, you wait for the housing market to go up. But if we say, hey, listen, if you sell your house now, we can buy another one here where the market's going to appreciate and you can start making money again, then that's a call that may happen. Why? Because we're rowing for the long game. We know we're going to get to Antigua. We don't want you to say, oh, I made 5% last month and I've lost 2% this month. Well, look at it over a 12-month time period and then compare that to the bank. Then compare that to an individual savings account. Then compare that to a 401k, whatever it's called, right? So there are times where there may be a strategic call. This is not a panacea, but every decision is made based upon long-term profitability. Mike, would you say that is a fair comment? John, just I'm being open here as well.
Definitely. Yeah, 100%. I'd say that's right. And again, just to give people completely transparent insight, when obviously Peter, John, Anthony, and I, we woke up to this news that the Forex market is crashing. Yeah, was I worried? Not at all. We jumped on a call and we said, look, what do we want the outcome to be to speak for clients? And I said to Peter, look, what are we happy with? Do we want to come out profit? Do we want to come out flat? Do we want to absorb a small loss, 2 to 5%, for example? And we made a decision that we'd either aim to come out flat or aim to come out of profit. But it was definitely a case of hurry up and do nothing. The algorithm was doing its thing. So Rob asked a question.
Here's the key point, Mike. We were the only algorithm that had the choice.
Absolutely.
We were able to sit back and say, what situation, what decision shall we make out of all of these decisions? Yeah, everybody else didn't have a choice.
No, absolutely. And look, John and I saw that firsthand. So Rob's question was, what happened last Friday? I saw 10 times the profit. And that's because, we were counter traded effectively. So we were managing the risk. And bear in mind that the stats that you see would be very different if we weren't managing this properly and if it wasn't counter trading. But at the point we're counter traded, we could sit back and it doesn't matter what the market does at that point. The market could go absolutely wild. It could drop through the floor. It would make no difference. So on that Monday, we said, look, we'll hurry up and do nothing. We'll aim for profit this week. If it gets to a couple of weeks and we're going to be flat, or even if we take 1 or 2% loss, we just communicate it and we take it. Friday, we saw the opportunity where we could get out at profit. So again, algorithm did its thing. We've got a bunch of tools that Anthony and I use to work out new levels, new take profit, etc. And that's what we did. And we came out Friday with a decent amount of profit. We effectively lost one trade, one side of the counter trades. Still had counter trading in as protection for when the market shot up, which it did. So again, fully protected from that. And now we've got what we call a recovery zone where hopefully market drops back, gets us out of sales. If not, again, with 4 out of tools available to us, the market keeps going. It's absolutely fine. We're covered. And that, like I say, is an absolutely privileged position to be in, for sure.
Yeah. I've got one question here that I don't want to put you under any pressure to answer, but we've got a lot of people here that already have a lot of people that they would like to refer. Now, obviously, when the app is here, this will all be automated. We did have a discussion at one point, and maybe this is something for Anthony to weigh into as well, for example, but as we've got a relatively small number of accounts, if somebody was to refer somebody and they were to confirm them themselves and send us a message, would we retrospectively for the next couple of weeks be able to stand that as a workflow to do it manually?
Well, that's a good question, Peter. So, look, I think it's difficult for us because we know people are keen, and I would say, look, for people on this call, if it's something you want to do, Peter, obviously I'll support you technically in it, and yeah, 100%, I'd be happy to follow that. Yeah,
because we can track it. That if somebody sends an email and says, "Oh, my friend John has just signed up. I sent him to the website. I said, and John is happy to confirm that you introduced him." It's a manual process now, which is a complete, excuse the term, ball ache for our team. But I just saw one of the people in the chat saying that I've got 4 people ready to go and I don't want to hold them back. It's going to be difficult, right? If you've got friends that are ready to go, don't go out now and proactively start referring. But if you've got friends you've already spoke to that are kind of chomping at the bit and holding their breath and you're afraid of losing them if they sign up, you're not going to lose them. We'll figure something out to attribute them to your account if you and them both agree that it was you to put them together, right? But please don't go out and make that a mission for yourself, right? If you've already got friends that are waiting, get them on board and we'll find a way to attach them to you so that you can start making that as soon as APIP is live. But that's going to put pressure on our client services team and our back end on there. I want to help, but if you can wait for the app, please wait for the app, right? That is what I'm saying. Mike, is that a fair comment? Anthony's probably just gone and hung himself.
Yeah, I was going to say that's completely fair. I think there's a couple of people on this call that would be getting worried. But look, we completely share everyone's excitement in it. And as much as I hate to say that this market's been great for us, it's been great to be able to demo it to you in this way and really show people. Like I say, when times are hard, and that's definitely the question that you should be asking. You know, it's all good when things are good, but what about when they're not? So yeah, look, we share everybody's excitement and we definitely want to support people where we can, I would say, definitely.
Outstanding. Guys, I'm going to probably, we've got one from Martin who raised his hand here. We'll take this as the last question because I want to be mindful. There's a lot of people watching on the replay as well that I don't want to drag them through anything more than kind of 90 minutes. So yeah, if, was it Martin there that wanted to come on? Let's have a look. And if not, what I'm going to do is I'm going to play the 17-minute video, which is the one you want to send your friends to watch. And most of you, if not all of you, have seen it. The reason I'm going to play that is to close us out, but leave the team being able to answer questions in the chat. So you don't have to think of looking at me or Mike or John or any of the team here. So, but when the video finishes, we will close the webinar, guys, and there'll be more updates coming out. We want to do this on a regular basis, at least once a month, so we can show you what's happening, what the progress is, answer questions, bring your friends, have them sign up, and we'll be doing that. So I'm going to play the Alpha-Flow video. It's going to be good for some of you as reminders, but for those that want to drop off, feel free to go. For those that still have questions, it gives my team 17 minutes to answer them in the chat. Mike, any last thing you want to share while I go get the video?
No, I think I would just say, look, thanks for everybody's time this evening. You can probably tell that it's something that I absolutely love talking about and could definitely do another 90 minutes. So yeah, it's something that I'm truly passionate about. And yeah, I really hope that everybody's enjoying it as much as we are. Definitely.
Outstanding. John, anything you want to sign off with?
No. Thank you so much for everyone's attention. It was fantastic to see some of you and hear your participation. And thanks, guys, for putting this together. Let's carry on upwards and onwards to the moon.
To the moon, indeed. Anthony, I know you've been beautiful in the background there as another one of the partners. And for those of you interested in a little bit more background on John, Mike, or Anthony, if you go to the website, you'll be able to see a little more about who they are and what they do. Anything you want to share, Anthony, for these incredible people? This is the person that really looks at your accounts every day and makes sure the algo is doing its thing.
Yeah, I'm not going to start my video because I haven't done my hair. In fact, I've got no hair left.
I was going to say,
but absolutely no. Thanks for everyone's support. It's a really, really wonderful thing to be involved in, and yeah, I'm very privileged to be a part of it, and I really enjoy it. And with the support of the team around me, we're achieving great things. So yes, thank you all.
Outstanding. Guys, thank you so much. Again, I'm going to leave the video playing so that the team can answer questions on the Q&A side and in the chat. Those that I know they're still working on answering questions there. I'll leave John, Mike to answer questions too. But other than that, I will see you guys on another update very, very soon. What if I told you that when you join Alpha-Flow.Ai, you can have access to an additional stream of passive income without investing a single extra penny? Welcome to the Additional Passive Income Program, or APIP. Yes, when you sign up with Alpha-Flow, you have the chance to earn even more simply by sharing our system with your friends. Remember, our mission is to help the average person win while tying our success to your success. Here's how it works. If you have an active account with Alpha-Flow, you can extend a special invitation, meaning one where there is no fees or cost to join, to people you know. And if they sign up and fund their account at a minimum silver level, we'll pay you a thank you in the form of 10% of the performance fee that we receive from the profits we make.
Uh-oh, I hope someone's manning
I just realized that was the wrong video.
Okay.
It's all good. 1 second. Let me get that one out of the way. What it should have been, ladies and gentlemen, I do believe, was this one. How's that?
The beauty of being
live. In this
live.
video, you'll be introduced to one of the most advanced AI tools available to the public, a tool that has been specifically designed and extensively trained to do one thing, and that is to give you an incredible advantage when it comes to winning in the largest financial market in the world. Think about it. Most people use AI tools like ChatGPT to save them time writing emails, creating images and videos. But why are they really doing it? Ultimately, it's to try to make more money. But what if you could skip all of that and just use AI to focus on that goal? An AI that had been trained for 6 years with vast amounts of data, was self-learning, and now consistently outperforms the top 10 hedge funds on Earth, even though they're ran by some of the smartest and most experienced people in their field. If this has your attention, and I'm hoping it does, stay tuned, because by the end of this short but insightful presentation, you will know more about how AI can affect your wealth than even some of the most sophisticated investors. Not only that, but you'll also have the opportunity to try it and experience it for yourself. Though, just before I reveal what it is, I have one statement and one question. The statement is a reminder and a reality check that no matter how good something is when it comes to where to put or invest your funds, there are never any guarantees. And anyone who tells you otherwise is at worst selling a scam and at best putting their interests way before yours. Which is why whenever you're looking at how your money can work for you rather than you working for money, always do your own due diligence. Trust track records more than marketing, and never ever invest money that you can't afford to lose. And if that's the only thing you take away from this presentation, then it will have been time well spent. Okay, that was the statement. Now for the question. Do you know what is the largest financial market in the world? Now, you may think it's the pharmaceutical industry, and that does $1.6 trillion a year. Although that's actually quite small when you compare it to, say, the oil and gas industry that turns over an enormous $4.3 trillion a year. But there's something even bigger, much bigger. In fact, not only is it the biggest market in the world, but it is worth a staggering $8 trillion a day. That's $3 quadrillion a year, or 700 times the size of the oil and gas market. I'm talking about the global currency market. And its sheer size and liquidity means it attracts a lot of people who try to make money. And there are many companies and organizations that will happily sell you courses, tools, and education on how to do that. The problem, according to the US Securities and Exchange Commission, is that up to 80% of people who get involved trading currency, even after buying the best training, lose badly. Why? Because of a dirty secret the industry does not want you to know, and that is the profit proficiency time frame. In other words, the amount of time it takes to go from consistently losing money to consistently making money is vastly underestimated. In fact, it relates to most money-making opportunities online. See if you can relate to this, and you'll see where I'm going. This is proficiency, and this is time. And let's say this is you at the start of your trading journey with relatively little skill or experience. Here is a professional level of skill where good traders consistently make good money. And here is the master level of skill where the Wall Street traders and the hedge fund managers are making millions. Now, Most people are sold on the promise and potential of how much money they can make here without being told the truth that the amount of time it takes to reach this point can be months or even years. And that requires you to pay the market in terms of learning and experience way more than most people can afford. Which is why 80% of people who get involved lose everything or quit long before they get enough experience to start winning consistently. Now, if you're working for a hedge fund or a bank, then of course you can afford to pay for this period because it's not your money you're learning with. And when you get here, you more than make it back. But for the ordinary people like you and I, that's a luxury we just can't afford. The good news is now you don't have to. In fact, what if I were to say there's an even higher level, one that is way higher than here, one that no human could ever reach? Welcome to Alpha-Flow.Ai. And if you think that's far-fetched, let me give you some context. In 1997, history was made when for the first time, AI beat the world's best chess player, Garry Kasparov, at his own game. That was a decade before even the first iPhone. Today, AI doesn't just beat grandmasters, it obliterates them. And there is no human on Earth right now that can come close to beating the top AI chess programs. Why? Because an AI that has been trained to master one specific field, what's known as narrow AI, is now more powerful and more accurate than the world's top 100 human experts in that field combined. Now, this was proven back in 2020 when a narrow AI was trained to analyze mammograms in order to predict or diagnose breast cancer in women, and where it easily outperformed the accuracy of the world's most experienced radiologist. And when it comes to chess, it's even more impressive. Do you know how many moves a narrow AI chess engine can calculate? It's 30 million moves per second. And it uses that power to evaluate every permutation out to 20 moves ahead on both sides, spotting patterns no human could ever see, making predictions, adapting to changing probabilities, and then using that data to ruthlessly execute decisions in real time, flawlessly and without any hesitation, doubt, or emotion. Now, how does this translate to Alpha-Flow and your ability to make money in the biggest market in the world? Well, imagine this. Today, you receive an invitation to play in a tournament against the reigning world chess champion, Magnus Carlsen. The problem is, you're way down here at the bottom of the learning curve, while Magnus is here. Chances of winning? Well, you tell me. But what if you had the world's most advanced AI chess engine whispering which moves to make in your ear? Magnus would not stand a chance. Now, what if instead of just whispering moves in your ear, your AI says, hey, listen, let me play this game for you. You go enjoy yourself. Spend some time with your family. You don't need all the stress, anxiety, or inconvenience of being tied to the board. In fact, I'll play the entire tournament for you, and I'll do it for free. All I ask is a percentage of the prize money. What would you say? Well, that's precisely what Alpha-Flow does. Not for chess, but for the Forex market. And for the last 6 years, Alpha-Flow has been secretly developed by some of the world's top experts to read, learn, and master the currency market, and up to this point has only been available by invitation. And as you'll see, the people who accepted that invitation have done very well. And that's because Alpha-Flow uses a highly advanced algorithm which analyzes vast amounts of data sets in real time. It learns and adapts faster than any human on Wall Street, spotting patterns, assessing probabilities millions of times a second, while simultaneously running scenarios and backtests in the blink of an eye. And it has been meticulously trained and programmed with one narrow objective: maximize wins and profits and minimize risk and losses. What does that mean? It means that you are no longer here competing with the grandmasters of trading, the Wall Street kingpins, the billionaire hedge fund managers, and the seasoned professionals. Instead, you get to play at this level. Or rather, Alpha-Flow plays for you while you go and enjoy your life. And if you're wondering just how effective it is, let me share the actual performance data. According to daytrading.com, professional traders in this range average around a 55% win rate, whereas the highest earners on Wall Street, who are making tens of millions, average up to a 63% win rate. And if you didn't want to trade, but you were wealthy enough to be allowed into the world's best performing hedge funds and let these guys invest and trade for you, you'd make an average of around 13% a year and pay a lot of money in fees for the privilege. Alpha-Flow's 6-year track record across tens of thousands of trades demonstrates an average win rate across all positions of an incredible 80.52%, translating into an average return for clients across all accounts over time of 8.76% per month. All of these results are independently audited and verified at myfxbook.com. In fact, to date, for the small number of people that have already taken advantage of Alpha-Flow, it's generated over $42 million in profit. Now, you may be asking, what makes Alpha-Flow so powerful, especially as automated trading strategies have been around for a while? What makes this so different? Well, without getting technical, most trading bots and algorithms out there base their strategy on historical data, meaning they use what would have worked in the past to try to predict success in the future. That's why virtually every single one seems to work for a while, but then when the market outgrows its predictable history, the algorithm fails. Alpha-Flow is different, and while it certainly uses historical data to form part of its decision-making process, it also uses advanced machine learning to evolve dynamically with the market, meaning every time it wins, it analyzes why, and uses that knowledge to help maximize future profits. Every time it doesn't, it analyzes why, so it can minimize future risks and losses. If the market's too volatile, it takes a step back and pauses, while at the same time processing millions of pieces of data to determine the best time to step back in or counter-trade positions to minimize risk. And right now, there is no other trading algorithm in the market that has over 6 years of active learning with the performance of Alpha-Flow. And right now, we're excited to open a new round of invitations for a short period of time for people who don't want to spend years to get here, but instead want to start here. So, you may be asking, what are the risks? How easy is it to get started? And how much does it cost? Well, let's talk about risks. Let me remind you again, obviously all trading involves risk, and past performance is never an indicator of future results. And that's why you should only always trade responsibly and only with money you can afford to lose. That's not just a legal disclaimer, it's common sense. And there are never any guarantees. But there is one risk you don't have to worry about when it comes to your money and us, and that is, who do you send it to? After all, there have been many stories where people with the best intentions have given money to people on the promise that they'll invest it in something that's the next big thing or that gives great returns, only to find out those people couldn't be trusted. Bernie Madoff, anyone? Now, with Alpha-Flow, your money stays in your account. That's right, you don't send any money to us. It sits in your investment account with your broker where you are in full control. You simply pay to connect Alpha-Flow's software to your trading account so that it can make the trades for you and then send us some of the prize money if it wins. Let me say this one last time to be clear. We don't want access to your funds. We don't have access to your funds, nor can we ever touch any funds in your account for any reason. The only thing Alpha-Flow can do, and is trained to do, is to decide and execute which trades to place so you don't have to. No buying expensive courses, no trying to learn the market, no constant screen time, no anxious nights wondering if you're going to survive the learning curve. Oh, and if you don't have a trading account, we'll give you a simple step-by-step guide showing you how to set one up with a respected broker, which can be done online in around 10 minutes. Now, we also provide full phone support if you need it, all staffed by real humans from our amazing team. As for the costs, we've kept them super reasonable. For the license fee to use the software, we charge an annual fee of $500, plus a one-time setup fee of $250, which includes the initial connection to your account, full onboarding and support if you have any problems, helping you set up a broker account if you don't have one, and we'll show you how to install an industry-leading app on your phone so that you can check your account and what it's doing in real time. After that, we simply take a performance fee based on any profit that Alpha-Flow makes for you. However, if you act now, we're offering a special incentive. And that's because we know that the more accounts that Alpha-Flow trades, the faster it learns and the smarter it gets, which is why, for a short amount of time, we are opening a special round of invitations where we're waiving the entire license fee and making Alpha-Flow available to you for free for life. Not only that, but if you join today, we'll also remove the setup fee, while still giving you the full support and the complete onboarding service to ensure everything is smooth and you can start trading right away. In other words, you join today and you will have zero upfront costs. We don't want a credit card, there's no subscription or any ongoing fees, nothing. Which means you can have Alpha-Flow's powerful superbrain working around the clock for you today for free. All we ask is that you pay us a percentage of what it makes if it wins, and if it doesn't, you don't pay a penny, which means we are fully invested in and totally tied to your success. Now that's how it should be. And as for how much you pay, well, it depends on how much you want to trade with. And there are 3 easy levels: bronze, silver, and gold. If you start at the bronze level with as little as $100 up to $3,000, you split whatever profit you make down the middle 50-50. Not the capital, just your profit. If your account starts at the silver level with $3,000 or more, you keep 70% of all of the profit, or you could trade at the gold level, which is $20,000 or more, and where you keep 80% of the profit and you send us the other 20%. Simple, transparent, and fair. You win, we win. You don't win, we don't win. And the more your account trades with, the more profit you keep. And let me remind you that we are doing this so that Alpha-Flow can learn to grow its win rate even higher. And when it hits 85%, we plan to raise those performance fees to anyone who then decides to come on during the next round of invitations. All you need to do to get started is click the link and register for free before this allocation runs out, and which locks in your special deal, including lifetime free access to the software, no setup fees, and a permanent freeze on performance fees, so no matter how much we raise them in the future, they'll never increase for you. Nor is there any obligation, pressure, or time limit on when to get started. In other words, if you want to take some time to move funds around or do more research, then as long as you register today for free, your invitation and price freeze are secured. And you can choose to begin whenever you want. There's no time pressure or penalty, though the sooner you get started, the sooner Alpha-Flow can go to work for you. And if you ever want to pause the algorithm, increase your account or withdraw funds, or close your broker account at any time, you can. Everything is under your control. So, while others are spending time learning AI to create videos, write copy, or design graphics in the hope of making money, or paying a lot of money to try to master the Forex market on their own, you are several steps ahead. Now, this risk-free invitation may not be around for much longer, and it's designed to give you the ultimate competitive advantage in the world's most lucrative market. Simply click the link now to take the first step and allow this revolutionary AI to do what it does best: help make your money work for you while you focus on living your life.